Hi everyone, welcome back to Corporate Decoder, the place where we try to understand what's really going on behind those corporate reports. And this time Petco seems to be going through quite the pet project of turning things around. Let's see if they manage to fetch a better result this quarter. All right, grab your furry friends and let's dive in. So what we have here is Petco's quarterly filing. It tells us how they did financially for the 3 months ending August 2nd of 2025. Think of it as a checkup for the company. Let's jump into the balance sheet. This is like a snapshot of what Petco owns and what it owes. On August 2nd of 2025, their total assets were about $515 billion. That's what they own. But they also have a lot of debts totaling over $4 billion. So they owe quite a bit more than they own right now, which isn't ideal. Quite a bit more than they own right now, which isn't ideal. Quite a bit more than they own right now, which isn't ideal. Quite a bit more than they own right now, which isn't ideal. Now, looking at their cash, they had about $188 million in cash and equivalents. That's the money they can use easily. This is up from their previous quarter. They also have a lot of inventory, over $600 million worth. Looks like they're stocking up on pet supplies. Their long-term debt is substantial, around $1.58 billion just on the senior secured credit facilities. That's a big chunk of money owed. Interestingly, their stockholders' equity is a little over $1.1 billion. This is the part that belongs to the owners, the shareholders. After all debts are paid, it's positive, but the debt is still a big number. Moving on to the income statement, this tells us about their sales and profits over a period. For the 3 months ending August 2025, their total net sales were about $1.49 billion. That's a bit down from the same time last year when they had around $1.52 billion in sales. It seems like they're selling a little less overall. Their gross profit, meaning the money left after paying for the products they sell, improves slightly as a percentage of sales. It went from 38.1% last year to 39.3% this year. This is good because it means they're keeping a bit more money from each sale. But their operating expenses like salaries and running the stores also improved as a percentage of sales. They were 37.9% last year and dropped to 36.4% this year. So they are managing their costs better. And guess what happens when sales are slightly down but costs are managed better? Their operating income went from a tiny $2.5 million last year to a much healthier $43 million this year. That's a big jump and a really good sign. This improvement trickled down to the bottom line where they reported a net income of about $14 million. That's a huge turnaround from a net loss of almost $25 million in the same period last year. So they're making money again, which is a major win. They also reported earnings per share, and it looks like they had about 279 million shares outstanding on a basic basis. This number can change as they issue more stock or people exercise options. Now for the cash flow statement. This shows us where the cash came from and where it went. For the first 6 months ending August 2025, they brought in about $70 million from their regular business operations. That's up from about $61 million the previous year. So their core business is generating more cash, which is excellent for a company's health. They spent around $60 million on new equipment and property in the same period, which is pretty consistent with the year before. That's normal for a company with physical stores. Interestingly, their financing activities used up about $4 million, which is less than the $5.9 million used last year. This means they weren't borrowing or paying back as much debt compared to the prior period when they were doing some refinancing. Overall, their cash pile increased by about $8 million during this period, bringing their total cash and cash equivalents to over $189 million. Looking at the notes, we see they spent nearly $18.2 million on equity-based compensation. This is money given to employees in the form of stock or options. It's a significant expense but common for retaining talent. Petco operates as a single segment, which means all their business activities are grouped together. They don't break it down by different types of stores or services. Their total revenue for the period was about $2.98 billion. Now let's talk about adjusted EBITDA. This is a way to measure profitability that excludes certain items like taxes, interest, and depreciation. Their adjusted EBITDA was $23 million. This is up from $159 million last year. This shows their underlying business profitability is improving, even if some one-off expenses are taken out. Their adjusted EBITDA margin, which is adjusted EBITDA divided by sales, improved from 5.2% to 6.8%. This means for every dollar of sales, they're keeping more as profit after major expenses. That's a really positive trend. When we look at risks, Petco says nothing major has changed from their last big report. They still face competition, changing consumer demand, and economic uncertainties like inflation. These are pretty standard for retailers. The executives have certified that the company's financial reporting is accurate. This is a standard part of these filings, ensuring management stands by the numbers. So what's my take on Petco's performance? Well, the numbers show a company that's really trying to turn things around. The decrease in net sales is a concern, but the improved gross profit and a significant jump in operating income and net income are very encouraging. They seem to be getting better at managing their costs and perhaps focusing on more profitable sales rather than just volume. The increase in cash from operations is also a strong indicator of a healthier business. However, the high level of debt remains a significant risk. While they are generating more cash now, a substantial portion of that cash will likely go towards servicing that debt. So, while the ship is starting to sail in a better direction, it's still carrying a lot of weight. They need to continue this trend of cost control and sales improvement to really get ahead. What do you think about Petco's performance this quarter? Are they back on track, or is the debt still too much of a problem? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into company financials. Also, make sure to join our Discord community. The link is in the description for even more discussions and deeper dives into these reports. Thanks for watching, and I'll see you in the next one.